Chapter 13, the budgetary control and responsibility accounting. What's important for this chapter? Obviously, we need the budget for control purposes. Once we have the actual results, we start comparing with the actual results. So the first thing that you have to do is you to understand that the variable cost, how the variable cost behave and how the fixed cost behave. Variable cost per unit stays the same. In total, increase with the level of activity, where fixed cost in total stay the same, but per unit decrease with the level of activity. First thing that we have to do on the budget is to prepare a flexible budget. Flexible budget, we're going to prepare it from the static budget. We're going to have a static budget which will be to one level of activity. That's what's going to happen next week on Friday. We're going to have information about the static budget at one level of activity. And there will be another results from the actual. What you have to do is you have to convert the budget on the static activity to the budget with using the actual results, actual input, and then compare the actual numbers versus the budget number at the actual level of activity. How can we do that? Very simple. First thing that you have to remember is, again, how the costs behave. And as we said before, variable cost per unit stays the same. Fixed cost in total stays the same. So what we're going to look for the something that stays stable, which in this case will be the variable cost per unit and fixed cost in total. And then we start comparing the numbers. So from our slides, what we can do is when the budget activity level is 10,000, our indirect material is 250,000. Indirect labor, 260,000. Utilities, 190,000. Depreciation, 280. Property taxes, 70. And supervision is 50,000. We have to find out which one are the variable, which one the fixed cost. Usually indirect material, indirect labor, utilities, those are all variable cost. Depreciation stays the same. Property taxes stays the same. Supervision stays the same. Once we know that, we have to find out what's the indirect material cost per unit when we're making 10,000 units. So 250,000 divided by 10 is going to give you 25. 260 divided by 10 is going to give you 26. 190 divided by 10 is going to give you $19. So for the indirect material, we're going to have $25, labor $26, utilities $19. Once we find out that, then it's easy to move our budget from 10,000 to 12,000 and then compare with the actual results. Again, we're going to get the cost per unit on the variable cost. We're not going to change the fixed cost. And once we prepare the new budget for 12,000, which is the actual level of activity, then we can start comparing the results. And then we can see that for the indirect material, we have a favorable variance. I mean, cost going down. Indirect labor, there is no difference in the cost. For the utilities, the cost is going down as well. So we have that favorable variance here. For the fixed cost is the same. So we're not going to change the fixed cost between 10,000 level of activity and 12,000 level of activity. Why? Because we're in a relevant range. So in order to be successful next week, what you have to do is very simple. To know how to develop a flexible budget. So you have to identify the activity index and the relevant range, identify the variable cost, and determine the budget variable cost per unit. Identify the fixed cost, determine budget fixed cost in total. Prepare the budget. Once you prepare the budget, everything's gonna come. The best way to practice is, this is the cost. The best way for you to practice will be this example here. Know how to move from 10,000 budget into 12,000 budget, and then compare with the actual. Those two slides will gonna help you. The other thing that you have to remember is how the costs behave. And you have to understand that the total cost always gonna be sum of fixed cost plus the variable cost. Once you get the fixed cost and once you get the variable cost, times the number of units, either 10,000, either 14,000, you're gonna get the total cost. And that's how you're gonna answer those type of questions. And then you could be able to prepare the flexible budget report for the comparative purposes. Remember one thing, both budget and the actual will be report from the actual situation. Budget will be report based on what the company budgeted. Both they have to be in the same level of activity in order to compare the final results. Otherwise, you won't be able to compare the final results. Again, as I said in the class, get the easiest ones first. Remember, fixed costs, they're not going to change. So whatever level of activity is given, move it to the actual level of activity. Keep it in mind, fixed costs going to stay the same. The only thing that you have to do is to bring the variable cost to cost per unit, adjust it to the actual level of activity, start comparing the results. That's what you have to do. The other thing you have to do, you have to explain to me what is the budget, what budget is, and what's the benefits of having the budget. How the budget is going to help you. That will be one question from that you're going to see next Friday. Next question, going to jump to the next question, will be related to a return on investment and a residual income. Return on investment, as we said in the class, can be calculated when you have controllable margin. Now, in your case, it's not going to be controllable margin, it's going to be just operating income divided by average operating assets. In your case, it's going to be only assets given. So you don't have to sweat on the average operating assets on anything. Only one number, the number is going to be given. The only thing that you're going to missing is you have to know how to calculate net income. If you don't know how to calculate net income or operating income, then you'll be in trouble. Which we know from chapter 1 that revenue minus expenses is going to give you the net income. After that, you're going to have this fixed assets as a denominator, and you can easily calculate return on investment. In this case, the return on investment is if the controllable margin here is 100,000, 1 million, and the average operating assets is 5 million, return on investment is 20% in this case. So you can have this one as a different calculations for the return on investment. You can see always in this case, we're working with the controllable margin divided by average operating assets to get the return on investment if you have to invest. So that's how you get your return on investment. Again, remember, operating income divided by assets, average operating assets. Now, the interesting part here will be the part that we miss in class. We covered this part, how we're moving from the calculation from operating income divided by operating assets. and how we're moving from operating income divided by sales times sales divided by operating assets. And we're creating the profit margin times investment turnover. The important thing that you have to do next time on your test will be to tell me how can I change a return on investment. If you have the obviously how you're gonna have the sales, you're gonna have the cost, so you have to come up with the income here, operating income. You're gonna have the operating assets, income versus divided by assets gonna give you a return on investment. Now the question is, how can I change that return on investment? So one way to change the return on investment is to increase the sales. If you increase the sales with 25%, your income controllable margin or income is also going to change. Income's going to go up, sales going to go up. Sales going to go up, assets going to stay the same, but that's going to increase return on investment. So one way to increase the return on investment will be increasing the sales. Second one is to decrease the variable cost or to decrease any of the costs. You can decrease variable costs, you can decrease the fixed cost. Either one's going to give you increase in the return on investment. So if I increase the cost, what's going to happen? My net income is going to go up. When the net income goes up, sales don't change and the assets don't change, but the operating margin goes up. And that's going to drive your return on investment higher. And the third way to increase return on investment is to reduce the average operating assets. If you reduce the assets, you're reducing the denominator in the turnover. That's going to increase the turnover. And if the margin stays the same, you're increasing the return on investment. So those are the three simple ways to increase return on investment. And you have to explain those ones. So what will be the formula for calculation of the return on investment? What do you think?
B and C. D is the correct answer, I guess.
Think again, and
D, both B and C are correct.
both B and C are correct? Okay, both B and C are correct.
Yes.
I can buy it. Let's move to the next one. This is what you have to do. I mean, not this one. Actually, not this one. You don't have to do this question. This question is not going to be asked on the test, but let's see how we can get the calculation here. So what are you getting as answer here? Or are you waiting for me to calculate it for you?
I think the answer is C.
Think answer is C? How are you getting that C? Let's see what the question asks. What the question asks. New division has reported return on investment. Return on investment, we know the return on investment, we're going to get it as operating income divided by average operating assets, right? So they saying now the return on investment is 14% with the operating margin. So operating income in this case is 250,000, 750, divided by something that we don't know. So now the question is, if this company already know they want 16% here, how much will be this and how much will be that? So if that is X here, once you solve it for the X, you can get Y, and we're looking how much is Y. The question is, Y is equal to what? And some of you, Natasha, already said C, and she's right. That means she made this calculation. For those of you who don't know how to do it, follow this calculation and you're gonna get it. Okay, let's move on. Return on investment is good thing, but we're gonna add residual income. Residual income, I explained in class, the residual income is the difference between what you get versus what you want. Now, return on investment, we're gonna find out that that has disadvantages. Return on investment ignores the minimum required rate of return on the operating assets. So basically, ignores how much we want. We're just seeing how much we get, but how much we want, that's irrelevant. So for that reason, we're going to use the residual income. The residual income, we're going to use it to evaluate the performance by using the minimum rate of return that we want. And the residual income simply will be income that remains after we're subtracting the what we want minus what we get. So for example, if the controllable margin or income is 1 million and assets are 5 million, return on investment is 20%. This company consider new project. To produce the product, operating assets will increase with 2 million. In order to get this new product, we have to increase the assets with 2 million. After we increasing the assets with 2 million, we expect to generate additional $260,000, which will be controllable margin. Now the question at this point is, how much is the return on investment if we invest 2 million and we get 260? How much is the return on investment? How much you getting, Natasha?
7.69.
How did you get 7.69? You're getting 260 divided by 2000.
That's where I went wrong.
So how much you getting?
1.3.
1.3.
13%.
13%. So you're getting 13%. Return on investment here is 13%. So if the company using their return on investment, internal return on investment of 20%, would they invest in this project? the return on investment up to this point is 20%. This project, if they go, they're going to give them 13% only. Would they invest?
No.
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 So, again, if the currently, without that company, they're generating 20%. For that project only, they're going to make 13%. If we add that project in the total company, we're going to get 18% return on investment, which is lower than what we currently have. So for that reason, most likely this project going to be rejected. However, if the company wants only 10% return on any project, would they invest in this project now?
Yes.
Yes.
Because it's going to give them 3% more. Make sense? So let's see how much will be the residual income if they want 10% and 10% only. If we have to do the calculation, how much will be residual income in this case? What do you think? They getting 260, correct? Minus how much they want. They want only 10%. How much they investing? In the assets. They're investing $2 million, right?
Yes.
But they want only 10%. So how much is the residual income?
They're making 60,000 more.
60,000 right away.
Yeah.
And this is your explanation here. That's the controllable margin that we get, but we want 10% of 2 million. So we want only 200,000. So we're making additional 60,000. So in total, we're gonna make 560,000 if we add this line. If we don't, we don't. Now, one of the main weakness here is we cannot evaluate, we should not evaluate projects which have a different assets or different size, because that's going to lead us to the wrong conclusion, the one we saw in the class on the board. So here the example will be, example, this C goat used 4 million to generate 460, right? With 4,000 average operating assets times 10%. So basically, currently, now our operating asset, average operating assets 2 million. We're generating 260. So we're getting 260. Now, based on the assets only, let's add here a new column. So they're generating 10%, but because our assets here are $2 million. See, our assets are $2 million. In this case, our assets are $4 million. Make sense?
Yes, it does.
We're getting just 200 because we have assets 2 million times 10%, 200. So residual income in this case is 60,000. Here, the residual income is also 60,000. But the question is, which project is more profitable now? In order to find out which project is more profitable, we have to move to something else. Obviously, both projects give you the same return residual income. Does that mean that we are in different way we're going to invest? Well, not necessarily, because if we check, so once we go to this case, the next thing that we have to check is return on investment. How much is our return on investment? How much is our return on investment in the first project? We're getting 260 out of 2 million, correct?
Yeah, 13%.
So return on investment here is 13%. How about in this case? In this case, we're generating return on investment here is we're generating 460 out of 4 million.
11.5%.
11.5%. So you can see now, even though both projects give you the same residual income, can you see it? Residual income in both projects is the same. One is more profitable than the other one. That's one of the weaknesses of the residual income, because the residual income ignores return on investment, which shouldn't be ignored. So tell me what we can say about this.
We can say it's not A.
That's correct. What else is not?
It's not D.
Definitely. Can we encourage them for possible termination?
I guess they must be the answer.
So which
C.
one? C. By elimination point, you're gonna go to C, yes. And C will be the right one to evaluate the management performance. And this is the last question from the chapter, which last question will be the most important question, because that will be very, very, very similar to what you're gonna get on the final quiz. So in the final quiz, that's what you have to calculate. You have to calculate return on investment and residual income with the information which is given to you. Now, it's not going to be given controllable margin, contribution margin, controllable margin, operating income, average operating assets going to be given. You don't have to worry about this. But you have to calculate the operating income. There will be no controllable margin, no contribution margin, nothing like that. But if you see something like this, for this type of questions, if you see a question like this, the question is, what we're measuring here, a return on investment on the company or return on investment on the division. If we measure in the division, then we're going to use the controllable margin to calculate return on investment. So how are we going to do here? Now our return on investment, it's going to be equal to, return on investment is going to be equal to controllable margin, which is 610,000, divided by average operating assets, which is 3,200,000. And once you get that one, then you're going to calculate the residual income, which residual income will be equal to what you're getting. You're getting 610 minus
32 lakh
what they want. That will be 3,200,000
into
times 12.5%. All right.
210.
Once you get those two, you're going to see what's happening.
B.
So the first one is 19% and the second answer is 210. So it's
And
B.
since we don't have, we have 19 only once, obviously which one it will be, right?
Mm.
Okay, so that will be the correct answer. So again, from this chapter, there'll be two questions. One question is to convert budget, static budget into the flexible budget and compare with the actual results. Second one is to calculate operating income and then calculate return on investment and residual income. Then there are going to be follow-up question on this one. How can I improve the return on investment? And on the static versus the other budget will be, what do you know about budget and what kind of benefits you can have when you have budget? That's two questions here. Let's see, that's the end of this chapter. There's nothing after this chapter. But we're going to continue because we have a quiz. I mean, you have quiz to do. So that's from this chapter. Let's see what's going to happen, what's going to come from the previous chapter. Previous chapter, I already told you in class, but I'm going to tell you again, so you have no excuses that you don't know. The next thing that's going to happen is on the budget size. Obviously, I want you to tell me what the budget is, what's the purpose of the budget, what else? What's the benefits or drawbacks to have a budget? What's the advantages, disadvantages to have a budget? And then I want you to calculate me where is it? I would like you to calculate me. Trying to find it. How
Professor,
to... Yes.
Professor, it's chapter 12, right?
Which one? This one?
This one, yes.
I have no idea. Let me see. It's chapter 12.
Okay, Professor, thank you.
So from chapter 12, you have to show me that you know how to calculate accounts receivable collection. So basically they will be given a scenario, and what you have to do is, let's use this one and let's duplicate the slides. And once you know that this is how I do my collection, so the next thing that we need to find out how much is our sales. And we're gonna go up, and I'm gonna grab the sales and gonna bring it here. Let me see where the sales were. Here are my sales. And I'm gonna flip it here. And what you have to do is you have to calculate how much I'm gonna collect. Obviously, in January, what we're gonna collect first? We're gonna collect whatever outstanding is from the previous quarter. We're gonna collect the 60,000 first. Second, what we're gonna collect? 60% of the sales. Second quarter, we're gonna collect the 40% of this receivables on the first quarter plus the 60% of the current quarter. Third quarter, what we're going to collect? 40% of the previous quarter plus the 60% of the current quarter. Fourth quarter, what we're going to collect? We're going to collect 40% from the previous quarter plus 60% from the current quarter. That's all you have to do. And that's what you're going to have. That's how much will be your collections for this period of time. As you can see, first quarter, we're collecting the outstanding plus 60% of the current quarter. Next quarter, what we're collecting is the remaining 40% from the first quarter plus 60% of the second quarter. And keep going. In other words, you have to show me that you can do this question. And obviously here in this question, you have to estimate the cash collection from the customer for the month of February. How much is the month of February? So in February, what I'm going to collect in February? First, I'm going to collect. What's my collection? In the 50% is collected in the month of sales, 40% of the following month, and 10% in the second following month. So in February, what I'm going to collect? First, I'm going to collect the 50% of February. 50% of my February. February sales. Then, what else I'm going to collect? I'm going to collect, next thing that I'm going to collect is 40% of my January sales. And the last thing that left to collect will be, sorry, not this one, this one. The last thing that left is to collect the 10% from my December sales. Once you get the number, you're gonna get the collection. That's what you have to do. That will be question number 3. And obviously you have to explain how can you improve the collection. What can I do to make the customers pay faster? And that will be from this chapter, chapter 12. Now let's move to the next chapter, which next chapter was chapter 5, and that was for the capital investments. From the capital investments, I already told you in class, but I'm gonna repeat again. From the capital investments, I want you to understand what the capital investment is, obviously. Something that you're going to invest for more than 1 year, usually 5-10 years. And I'm going to test you. I want you to know both methods, cashback and present value method. What's the benefits of one? What's the drawbacks in the other one? What's the benefits and drawbacks in one and the other? But also, I want you to calculate me cash payback method. Cash payback method will be how fast or how long it's going to take us to recover the initial investment. If you have the same amount coming period by period or year after every year, it's going to be simple. Cost divided by the cash that you're getting every year when the cash is the same amount. I already told you that's not going to happen on your test. I'm not going to give you the same amount. It's too boring. I want you to do something more. So the information is going to be given is every year you're going to get different cash. So what you're going to do, either accumulate the cash. So there are 2 approaches here in this question. Either start accumulating the cash. First year I'm getting 60. Next year I'm getting, with 90 that I'm getting, that will be 150. Next year I'm going to get another 90, that will be 240. And most likely in the 4th year, I'm going to reach 300. So it's going to take me definitely 3 years. Now the question is how much left to recover? 60 divided by how much you get in the 4th year is going to give you the fraction for the years that you need. Second option is start with the 300 and start deducting. 300 is my investment. So after the 1st year, how much left? After the 1st year, once I collect 60, I'm going to get 240,000 left. Next one, I'm starting with 240 minus 90, you're going to get the number. That's the other option that you have. Minus 90, that's going to give you 150. Next year, we're going to deduct 150 minus 90, then you're going to have another. That will be 60 left. When you're going to recover the 60, definitely going to recover the 4th year. So definitely 3 years going to take me. How much I left? 60. Divided by 120, it's going to give you the fraction for the next year. And you're going to find out how to get it. Which way you're going to use, it's up to you. You decide which one best suits your needs. But again, I want you to know the pros and cons for the payback method and pros and cons for the net present value method. So technically, if you want to practice on this question. You have the cost of the machine, you have how much is going to be sold, expected generating cash, 1st year, 2nd year, 3rd year, 4th year, and you have to calculate the cash payback method. Obviously, the question is going to tell you, company wants minimum to recover the investment within that period of time. So what you have to do, you have to tell the company, yes, invest because you're going to get it before your time that you want, or no, because you're not going to get it within the time that you want. That will be the question 4. In total, you're going to have 6 questions. So we cover 4, 2 more to go. From where the two questions gonna come? Obviously, now you can guess from where they're gonna come. They're gonna come from week 7 or chapter 11. Which chapter 11 was the incremental analysis. So let's see which question is gonna come from the incremental analysis. Incremental analysis, again, is the one that calculating only additional profit or additional cost that's coming, and we making decision based on that. That's for decision making. So first question is gonna come is, should I buy it or should I still make it? If that's the question that you're gonna ask, is gonna be asked. So basically that will be outsourcing. Should I outsource my production or should I keep doing it internally? Now you're gonna consider this, and the decision criteria is, if you generate cost saving, go for it. If you end up spending more money, no go. Obviously, you have to consider the qualitative factors, which I'm going to ask you. You have to be able to identify which are the advantages and disadvantages if I eventually make it or if I eventually buy it. Which one is, you have to be able to identify those ones. Now, the information that you're going to be given is going to be close to this or something like this, similar. You're going to have the information about the cost and numbers the switches that you're producing to get this cost. So technically you're going to have direct material, direct labor, variable overhead, fixed overhead. And there will be additional information about cost saving and anything like that. So basically, if you purchase the switches for $8, you can eliminate all the variable cost plus 10,000 of the fixed cost. So 50,000 of the fixed cost gonna stay with you. So what you have to do, calculate how much take you to make it. To buy it, you have the cost. They have to pay $8 for 200,000. So $8 per switch or 200,000 in total. So you got 200,000 total plus the fixed cost that I cannot save or is gonna stay with me. It's gonna give me 250. Based on that, keep going, making it, because you're saving $25,000. That's what is expected from you. So the easiest way to practice is get this question, focus on this question, know how to do this question. Obviously, it's not going to be multiple choice questions on the exam. You have to tell me and you have to show me that you know how to calculate this. So the cost again is going to be given to you. It's going to given what's the saving on the fixed cost. Is there any additional cost that is going to be has to be considered when you decide to buy the product or not? So in this case, it's estimated that 10% of the fixed cost no longer is going to be there. And cost to purchase supplier will be $85. If this company purchased this one from the outside supplier, what will be the monthly? And the other thing is that the estimated no longer will be included company. And you have that information about the other cost. So you have to decide how much is going to cost me and should I keep make it or should I buy it from outside? And after you do that, your job is not done. You have to tell me, you have to be able to do the qualitative analysis or explain to me what's the advantages or disadvantages or plus and minuses, whatever the question asks you. That's one question, and that's question 5. That's question number 6 gonna be on the Special order. Should I accept this special order or not? Now, on the special order, the decision criteria is as long as the special order that you're making and getting the revenue contribute to either the income, obviously, in order to contribute to income, has to contribute to the contribution margin. If there's a contribution to the company wealth, go for it. If no, no go. The key assumptions here are that the company has the capacity first. Second, this is not going to affect the company normal sales. It's not going to affect the company business. And in this case, we have this a customer offered to buy a special order 2,000 blenders at $11 per unit. That's not going to be affect our normal sales. We have sufficient capacity. Currently, we're operating at only 80% of the capacity. So we have that capacity to generate a little, to make a little bit 2,000, those 2,000 blenders to make it. Fixed costs in this case, in those type of questions are not relevant because obviously at this point we're working above the break-even point. So once we are above break-even point, we are fixed cost free. So what we're going to focus? We're going to focus only on the variable cost. And any additional cost that we might have to incur in order to produce the special order. So if the variable manufacturing cost is $8 and this person offers us $11, so definitely we're going to generate $3 per unit. Time 2,000 blenders, that's going to give us simply $6,000 increase in our operating profit. So once we do the calculation, if I reject the order, obviously I'm not going to get anything. But if I accept it, my revenue is going to jump with $22,000. My cost is going to increase with 16, so generally I'm going to generate $6,000. $6,000 again come from 2,000 units plus times $3 per unit. And the way to practice for this question is this is the way to practice for this type of questions. Obviously, again, on the exam, you're not going to see multiple choice questions. You're going to give you information, so you have to calculate and tell me, should the company accept the order, should not accept the order. And once you do that, once you tell me this, again, I want you to tell me what will be the benefit or drawbacks, positive or negative, if I decide to accept it or if I decide to reject it. What's going to help me? How this is going to make my life easier? And that will be the question number 6 for you. And at this point, I pretty much cover all the questions that's going to come on your quiz next Friday. Before I talk about the report and your recording, let's go on the grades. Again, it's very important week for you. That's where the 50% of your grades going to come. Make sure you submit your self-assessment. One person already submitted. Waiting for my approval. The next thing is discussion posting. Discussion posting, what you have to do, go to the discussions. What I'm gonna do is I'm gonna go and check how many post threads I have. I have 35, so most likely everybody here posted. So I'm gonna check the statistics, see who has zeros. So total forums, total replies, everything here. Basically, there will be no zeros here. Ups, there's 1 0. this student decides not to post anything, so he's gonna get, since we have 10 discussions, every discussion give you 0.5%. So this person's gonna lose 0.5%. So now he's down to 4.5%. Let's see the next statistic. I'm gonna checking again and going down, going down, going down. This case, nobody's losing 0.5%. Everybody's gonna get the 0.5% of this discussion. Then we're gonna go discussion number 3. We're gonna check the statistics and we're gonna see who has 0, who don't have 0. So everybody's okay. So we don't have to do anything and keep going, keep going, keep going until I check all the discussions. And that's how you're gonna get your 5%. 10 postings, 0.5% each. So here you can see now I have here 34 students, so that means definitely somebody's missing it, or maybe nobody. Let's double check. No, we're good here. And but on those 33, we have somebody who didn't do it. And the winner is the student. So he's losing here, he's been losing here 0.5%. And the next one is 34, so most likely everybody submitted here. Gonna view the statistic. Let's see if that's confirmed. Yes, everybody have posting. So we're good. And the last week left week 9. Oh, oops, on week 9 we have a lot of missing, and week 11 also a lot of missing. So let's see what's the statistic here on week 9. Who's missing? You can see yourself who's missing. Make sure you're getting those marks. That's what you have to do. So the other thing that I wanted you to do is what I'm gonna do here in the content, which is not gonna be for marks, not in the week 11, on week 10. On week 10, I'm gonna go and I'm gonna create a new discussion, which will be, let me see where I can do it. I can do it right here. Upload, no. I'm gonna create a discussion, a new discussion, and final words. So what I want you to do is you to write me some final words. Again, this is the last time that we're having lecture. There will be no more lectures for me. So give me some feedback, final words. If you want to share your final words, anything that you want to say, anything that you feel that you like to say, anything that you want. So please give me your final feedback for the course delivery, your experience, and give me some final words for this journey we had over the last 11 weeks. It's not going to be for grades, just express how you felt during those 11 weeks, 10 weeks, 11, and what I should take from this. That will be for the easy grades, that's 10%. So now the last that left is the report. Now on the report, let's go to the group rubric case report. This is from where your 25% is going to come. 20% is going to come strictly from the report, 5% is going to come from the presentation. Let's chase first the 5%. 5%, you have to prepare presentation which is recorded on the link, and that link has to be submitted to me. With if you're using Teams, Microsoft platform, make sure you give me the access to that video, because if I cannot watch it, then you're gonna lose your marks. So on the video, what is expected from you? I'm expecting equal amount of speaking. 6 people per group, 3 minutes per person. Video should be around 18 minutes. That means each of you has to speak between 2.5 and 3 minutes. If the person speaking less than 2.5 minutes is going to get the mark deduction. The individual is going to get the mark deduction, not the group. If the individual speaks more than 3 minutes, the individual is going to get mark deductions. So what you have to do in front of your camera when you're speaking, put your cell phone with the timer. Once you see 2 minutes and 30 seconds pass, few more words, close it, pass it to the next person. Once you pass it to the next person, if you're doing the recording all together at the same time, don't turn off your camera. Again, if you're presenting together, if you turn off your camera, I'm gonna deduct your marks. I wanna see how your behavior when you're not presenting as well. It's also part of the presentation. So you have to stay focused, you have to not to get distracted or decide to go cooking and doing something else. I did my job, I don't care about the other people. That's not the attitude that I want to see. I want you to stay with the group until the group presenting. You're part of one. And if you decide to deviate from that one, that's okay, but I'm gonna reward you for that deviation. And that's what I want you to do. So don't turn off your camera once you stop speaking. Don't turn off your camera when the other person starts speaking. Your camera should be on all the time, so I should be able to see you, what you're doing, where you're putting your hands, how many times you're sleeping, how many minutes you're sleeping, and how much you're yawning when the other people presenting. So simple advice will be stay professional, smile in front of the camera, and that's all. Freeze yourself for 15 minutes. You have 3 minutes to present. So the next 15 minutes, just stay there and smile. That's all. The last thing that I wanted to tell you, I want you to look professional when you are in front of the camera. Pretend that this is official. Let's say you're in the job interview. So dress yourself up professional. Keep that professional demeanor through the entire presentation. That's for the presentation. Now let's go to the report. On the report, we already spent enough time, or you already know what content on the report should be, all the details that you have to cover on each group. So I'm not going to spend time on the coverage. I'm going to spend time on the presentation. Presentation has to be well structured with all the sections, including the title page and executive summary. So you have to follow the APA format. So, and also no grammar mistakes. The next thing is all the issues that were identified and discussed has to be identified and discussed in your report. Truly. Means all the way. And recommendation. So you can of the each issue you can provide a recommendation. If that's the case, at the end I still want each of you to have conclusion and recommendation part. In that part, what you have to do is list all your recommendation in the proper order, which one is based on the importance, which one is the most important, which one is the second important, and keep going until you list all of them. The next thing is you have to support your recommendation. I mean, analysis is going to support your recommendation, but you have to tell why this is your recommendation and how this is going to improve the situation. And don't forget, I already talked to one of you, and I show you, if you tell me it's very advisable for the company to accept this and this. That's not a recommendation. That's a very good conclusion. If the part that you're counting for recommendation don't have the words our recommendation is, then there's no recommendation. The only way the recommendation to become a recommendation is somebody to tell our recommendation is, or our group recommendation, no group recommendation, you're not group, you're team. We recommend to do this, or our recommendation is. If you don't mention a recommendation, I'm not going to mention about the marks. And that's about it. Again, only one person submitting per group. I don't need all the 6 people to make a submission, so only one person submitting. I know your groups, and I'm gonna give you the marks to each member. And that's all. Yes.
Hello. Can I ask, this we have a discussion for post self assessment. What's it about? What should I post in that?
Well, I believe that's post assessment session on the assignments here. If you go individual assignments, so basically
What should I
discussion post
post in that?
assessment. So this is the one, right? This is the one that
Yeah.
you have to submit. Now, if I open it,
No, like what should I post in? I don't know. I'm not clear about that.
let me, I cannot see it from here, what exactly it's about. I'm trying to find out the content. There's a content. So basically, you have to self-evaluate yourself on how did you do during the semester on your discussions. Did you,
So
were you on time? Did you put all the effort that it's needed for you to succeed? Something like that.
so
I'm
I
trying
just
to, yes,
write some words.
write some words. I'm not going to be judged on you. Whatever you decide to evaluate yourself, that's how you feel, that's how you feel. I'm just going to read it and
Can you
gonna
please like
submit it.
page limit or the
So
word limits, or just write some?
just write something.
There is no page limit.
There's no page limit.
Okay.
You can write me 17 pages, how you did during the semester. Totally fine. You can limit to yourself to only 16.4, 16 and a half pages. Still okay with me. It's up
Yeah.
to you. No problem. You can do whatever, you can do as many as you want. You can add whatever you want to add. I'm trying to find where I can see, because somehow there was, I still remember there's somehow there I can actually see what's on that. But let me see if it's here on the 10 checklist, learning objectives. Da, 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 da. Feedback, no, it's not here. Okay, report, but anyway, just make sure that you submit that part of your assignment. So the due dates for the group project or the report is Saturday, next Saturday. For the presentation links, Saturday as well. For the group feedback, you have to send me the feedback, Saturday as well. Discussion self-assessment is Friday. I'm going to remind you again in class, in Friday, that I want that one to be submitted. And that's about it. The other thing that I wanted to ask you is what time you want we to start the quiz? Do you want to start the quiz at 12:30 sharp, or you want me to give you some buffer and we to start the quiz, let's say 1 o'clock?
12:30.
So let's go to 12:30. Who is yes, who is not?
I'm S. And
So
Professor, there
yes.
is one thing in like that clip about the clips. Is that we need to post?
Sorry, which one?
Okay, I will tell you. In quizzes, sorry, not in
Oh,
quizzes.
those one, there's a videos, something like that. Is that what you're talking about?
There is like part clip 1 and clip 2. What's it? We need to.
I honestly, I have no idea what's that. But that's not for marks anyway.
Okay. Thank you,
So
Professor.
you're talking about when you go scroll this one, week 7, clip 1, clip 2, clip 3. Is that what you part 1, part 2? Honestly,
Yes.
I have no idea. There's a people who actually did it, but as you can see, there's no marks on this one. Those doesn't give you any percentages. So some people did it. I don't know what exactly they did, but yes. So what I wanted to do is let's launch this thing and tell me what how we should do this. What time are we gonna start? I need 7 more answers. We have 22 people here. I have only 15 answers. Give me some more.
I think we need more time this time for the quiz.
Okay, done with this pool. 7 people are just turn on their computers. Obviously, they're not here. This is your results. Can you see the results?
Yes.
So now that answered the question, what time we're gonna start? We're gonna start 12:30 sharp.
Thank you.
Thank you, Professor.
Thank you.
We're trying to make it a decentralized system, right?
Sorry, say that again.
We're trying to make a decentralized system, participative
Yes.
kind of.
Yes,
Yeah.
Professor.
Okay, so now, next thing that I want to discuss is your last assignment. The presentation slides. If you don't have any other questions, enjoy the rest of your Sunday. Have a great remaining of the weekend, great week, and we're gonna see each other on Friday. Be on time so we can start on time.
Thanks, Professor. You have a great
Thank
weekend
you.
too.
You too. Thank you.
Thank you,
Thank
Professor.
you.
Thank you, Professor.
Thank you, Professor.
Thank you.
Thank you, Professor.
Thank you.